Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's Tuesday in a shortened week again. We're going to have Friday off, so that's going to be fun times as always. So let's see what they're doing this morning. I did see the dollar down a little bit. If I can get my mouse. There's the mouse. Right there. There we go. So the dollar is down. It's kind of quiet. We're seeing the euros moving up. There is a very strong, I guess you could say, very strong opinion that the market is anticipating interest rates lower over the next 8 months. So in other words, they're kind of like looking past the next quarter increase, and they're thinking, okay, 8 or 9 months from now, the market's going to be down. And a lot of times markets do, especially equity markets in particular, they move a little bit slower, but bond markets obviously move faster. But they are anticipating the idea that interest rates are going to be flat to down, and there's some that are saying watch the 2-year, because the 2-year is trading in almost the 5% area, and I think matter of fact, it might even be higher than 5% right now. Let's just double check it. But they're saying that the Fed's got to get down about a point or so underneath it. So we're probably looking at 3.5% interest rates, and the market is making that, I would call it like a tap dance. They take a step or two in that direction, then it goes into another direction, and then they go back into that direction again, and so forth. And I think that's where we are at the moment. I'm heading for the interest rate market as we speak. There it is, bonds, and we're going to bring this over to you, put it up over here like that so you can see with us. Minimize that. And then we go like this, and let's take a look at it. And then, where's it at? Come on, bonds, you can do this. There we are. So the 2-year is right there at 4%. And notice that nothing's at 5% anymore. And that's because the market is anticipating that situation. They're anticipating that they're trying to move down, and more than likely they're figuring that's what's going to happen. And it's like the classic buy on rumor, sell on news, and that's where they're at the moment. And you can see it across the planet. There's the German market. You see it all in the 2s now, and they were up in the 3s. I think the British market is in the 3s, and there's Japan. They're the only ones that are still doing the minus, I think. Yeah, right there. The 3-month is a minus, and the 2-year is at a minus in Japan still. That's why it's always interesting to see how the currency moves over there. It does. It is fascinating to watch it move. Whoop. Now what did I do? Let's see if we can do this one more time and get that back. There we go. So that's where we stand, and that's where we are. Markets thinking that interest rates are pretty much done on the upside. A quarter here or a quarter there is not going to be much more than that in their heads. They passed HR1 on Thursday of last week with Ramadan on. It took until Sunday for Saudi Arabia to come up with a good idea, and they did. The first day of the week, they said, no, we're not going to give oil away. You're going to have to pay for it. As I sip my tea. And that's pretty much the name of the story there. That's why oil is higher and and bonds are dropping. And the stock market is firm and happy and up, basically. So now let's look at the dollar index itself. You see it right there, a down dollar, because, again, what is happening, traders? Interest rates are dropping, basically, or anticipated to drop in the United States at this point. And then we slide over to Chicago Quant right there, and you can see the same thing. It's the dollar index, and it's just hanging out. At least we broke the 102 area. That's nice. It's 101.74 on J4X. And we're in a daily sell here from yesterday. And you can see we're underneath the weekly now for a couple of weeks, actually. A good 3 weeks. And you can see that's 4 weeks. Is it 4 weeks? Yeah. 5 weeks? 4 weeks in the fast. The fast broke down right up in here. So it wasn't much of a surprise to us. And we were talking about it here, and now we're seeing it. and we're seeing it more and more and more. And moya moya moya. And so the currency pairs are gaining against the dollar. And let's take a look at them. Let's see, where are you? Excuse me. There is the euro. See, the euro broke a high there of the last couple of months. It's pushed up a little bit in here. That was the high. It's back down again today. But it did push up earlier in the trading day. And you can see at the same time, boy, I got a tickle in the throat. I must have eaten something somewhere. I think I'm going to throw a piece of gum in my mouth. That'll straighten it out. Because all I want to do is cough. You can see there the euro, in a weekly buy for a couple weeks. And you can see the fast moving even faster than that. And we're now going on 5 days in a buy. 6 days in a buy. 6 whole days in a buy. We figured it'll, go up higher because as interest rates drop here in the States, that will put more energy into the other currencies and move the dollar back down. We keep on expecting to see a break of the century mark, but that could be a real psychological battle going on there for a while. And then let's put it up on J4X. See what it looks like right there. There it is. All right, so there is the euro. You can see them doing the same thing as we're doing over here. Now we'll go over to the cable. And there's the cable right there. And you can see it's showing even more strength than the euro. It keeps on finding a way to march up. And 4 weeks in a weekly buy, the fastest 5 weeks in a weekly buy, almost 6. No, 5. 5 right there, joined in right with that daily buy here, which was moved over one. Like that, right there. And then they got the sell there. And back in the saddle again. So buy, sell for a couple days, and then zoom to the moon Alice. And let's put it up over here. And there it is. So there's the daily there on J4X. Same situation, just a slow, steady burn on the upside. And that's really what it comes down to. And to me, I see it only that way. Even when they shift directions and I go into a weekly sell, I don't think they have a lot of life in them. I always think of them as, just a quick, couple weeks down and then back into the saddle again on the upside. I just cannot accept the overvalued dollar in my head. It's bad enough that we're the world reserve currency and we get trapped into printing more than we want to print. But then it gives the politicians carte blanche to go print even more. So, I have to believe that sooner or later we're going to get back to some type of normality. And that's what the real problem is that the normality of, someone sent me an email today. Oh, wow. Let me see if I can find it. It was interesting. It was, they were talking about, let's see, let me go find it. I thought it was interesting at the time. Let's see, where is that? Right there. There we go. And then I just threw it in the trash, and I thought to myself, it was from an old trader. And I didn't really think too hard about it in the beginning. It was from Grants, And they were talking about, let's see, it's a Google Finance Chief Ruth Perot recently said in a rare company-wide email that the company is making cuts to employee and services. And this is the bond newsletter, and I'm thinking to myself, doesn't mean anything anymore. It just doesn't. As much as those fundamentals, as Janos did with his videos, the fundamentals are just not what they used to be. And And why I said to them is, the quantitative easing, as I always say here on the webinar. It's the quantitative easing that's really got it all swallowed up in the end. So in other words, no matter what we think fundamentally, it's more based off of what the Federal Reserve wants. And right now the Fed wants a firm dollar. And so the dollar will stay firm on some level. But I think the pressure is on the downside to it. But I can imagine them being very ferocious at the dollar, the 1.0 area. That would not, surprise me whatsoever. And they're the buyer of last resort now. That's what the problem is that they are. And there's nothing we can do about it. We just have to, grin and bear it, basically. So, what else is there to be said about any of that? I guess that's about it. So from the cable, we're going to see this thing move up, and we're going to see a lot of these currencies pairs move up against the dollar in a general fashion. But knowing that doesn't matter about unemployment, employment, inflation, no inflation, they're going to be protective of the dollar because they like spending money. And that's what the problem is. Whereas a lot of us fiscal responsibles in the United States for the last 5 decades have said, be responsible by being the world's reserve currency. Don't take it as an advantage to go spend. But this last 2 years, it's been incredible amounts of trillions being spent for nothing. It's still sitting around. They can't even spend it. They've passed bills and moved the cash to a point where there's so much laying around that there's trillions, like $1.5 trillion, $2 trillion laying around in accounts, in government accounts, because they don't have the ability to spend it as fast as they presented it. It's a very odd situation. Alrighty, and from there we go over to, where do we go to? We go to the Swiss franc, and there's the Swiss, slowly grinding down. They're not doing it so fast. You can see that long weekly sell from here. The slow is going in and out, and then out again, or out and in and out. But overall, it's still staying down below. The daily is just inching along. I think you have to think in your head that maybe the bottom of the channel is probably that 90 area. So it's going to be very hard for it to break, but I think that overall it's going to adhere to the low end of the range. And that's what I keep on trying to convey is it'll be the low end of the range and try to make lows. J.A., how you doing? Good morning, good afternoon, and good evening. So that's really what it comes down to, is that there's a range that's set by the Federal Reserve and the Treasury Department, and so nothing can drop too quick because they want stability. That's the whole thing of QE is stability. Stability means you buy and you don't lose. That's what stability means to them. All right, let's see what the Swiss looks like right here on J4X. There it is. Let's see. JA says, I'm fine. You don't have to. You do not have winter summertime change in U.S.? Yeah, we did. We're an hour difference now. So I used to start at 7:30 a.m. in the mornings, and now I start at 8:30 a.m. in the mornings. Where are you located? Are you in the northern hemisphere or the southern hemisphere? Or are you right on the equator? And there's the Swiss up on J4X as I wait for the answer. And you can see it on the right and on Chicago Quant. And so it's just a slow, steady burn trying to break into the 90s. And I would imagine it'll be somewhat of a challenge. They don't want to disrupt the range. You can see it there when we go on J4X when we show you the range. So it's going to take a lot of work to break that down and get it back into the 80s. All right. From there, we're going to slide over. So I have now 1445. Yeah, that makes sense. 1445. Oh, you're in the Czech Republic. Yeah, so it's like what is it? It's 4, 7. You're like 3:45 in the afternoon, right? Are you 3:45 in the afternoon or 2:45 in the afternoon? What do you think about the yen? MACD showing upward trend, stochastic down. Let's take a look and see. Here is the yen, right there. And let's put yen over here. And there is I got the stochastic moving down. See that on a daily? So the fast stochastic's moving down. And let's see what the MACD is doing. We'll put the MACD on Chicago Quant because it's easier to do for me. We'll put it down on the bottom. Let's see, go like this. Format indicator. Add. And let's put MACD in there. There it is. Now it looks like to me the MACD is trying to actually bottom and lift up. Let's see what you said again. Let me just read it again. Let's see. So what you think about it? MACD showing uptrend, right? Yep, that's what I'm seeing too, right there. Well, let's see. The histogram definitely. Let's make some of this stuff clearer so we can see it even better. So there's the histogram. The yellow line is there, and it's just a little bit. The yellow line is trying to bounce up through the blue line, the cyan line there. So that makes sense. And at the same time, there you have it on J4X. You have the the stochastic trying to move down. I'm in a sell. I'm in a weekly sell and a daily sell, and I'm in a daily sell from yesterday. So when it comes to day over day, I'm more of a bear than I am a bull. That's the wrong place for that. Let's put it down below. And so the MACD is trying to bottom out. You can see our fast algorithm is turned up right there on the weekly. But on the daily, it doesn't care. The slow is, it has turned up. It has done that. That's true. So we'll see. We're looking on a day-to-day basis on this, so I would think that MACD might get trapped out of this because I find out of everything we're watching here on the screens, I find MACD the slowest. So it's making the bounce now from this action here. You see that right there. So you got your histogram moving up, you got the yellow line moving up and bottoming with it. And now the question is, does it get through the zero line? And then it takes, that means it would be going up. You can see there the histogram looks like it's gone through the plus at this point, even right there. What is that? That's the red. So it's actually above the zero line. Does that make any sense? Yeah, 246 for you, right? Yeah. So that's where we are at. What else can we say about any of this? What's next? Let's see. So there's the yen. I think the yen is going to go sideways and down because we're in that weekly sell. And I know the fast is jumping up, and it's definitely something I take very, very serious. The only reason I'm not that concerned about it is the slow is below the manifold. Now, when the slow gets above the manifold with the fast, then you see strength. But when you see, like here, let's see if we can show you. Let's tighten this up. When the fast, let's see, fast, is there a point where it does that? Where it fails. Maybe we have to go back further back and see. Yeah, so like in this one right here. See how the fast got up through the zero line, but the slow stayed underneath the manifold, and then the fast joined back in again going into the next week. and it was a sideways down action, basically, or just sideways, making a low at the very end of a month and a half of nothing. So I kind of want to believe that that's probably the yen. The yen may look like something like this, and we may be at this point right here getting ready to do another one of these, but it may not break more than down to the 28 area, where I keep on thinking it wants to get back to the 25, but we'll see. But I believe that's more of the way I think the math is trying to tell us. So we'll see how this does right here, and see, basically see if it, kind of breaks through. This stays below the manifold, and the next week it's turned back down again. How's that? Does that make any sense? I think I'm impressed myself, actually. I thought it was a good description. So that is that with the dollar yen. You know what I like? The zloty, one of your neighbors, the Polish currency against the euro. Boy, does that look so good all the time. It's a really solid trading product. Then let's see what else we got going on. Let's go over to the Turkish lira. Right there, there's Turkish lira. Put it up over here at the same time. So you can see there it's firm again on another day. Now it's like 5 days in a daily buy and a weekly buy for going on a third week now. Right there, Turkish lira, euro, Turkish lira pairs trade. And that's breaking down. What else can we say about that? That's the only thing I've been saying. I say it over and over again. I have to believe that what we're really seeing out of all this is that the Turkish lira had a lot of money come into the country to help out with the earthquakes. And now that it's over with, in other words, the money's there. I'm not really seeing much selling of Turkish lira. People are buying it again. In other words, it's losing value against the dollar. So that money that came in from the relief agencies helped out keep the currency flat for a while and gain actually against the dollar. But now it's over with, it seems like to me. All right. Did that make any sense, J.A., on the Japanese yen? We'll see in the next day or two. And your MACD probably may roll over. All right, now let's go to the Canadian. And it's flattened up a little bit. Made another low, but nothing major. You can see the work is trying to turn up. You see here both are moving down and very comfortably, which makes sense since we're seeing West Texas gaining in value. It's been on that upwardly slope, so the Canadian is on that downwardly slope. Oh, yes, let's see. Yep, I'm just playing with the indicators. It makes sense. Let's make some coffee, and yes, next day we'll show I'm on short position there on yen. Okay, yes, I think that's a safer place. We'll see. It'll be good. Tomorrow's Wednesday, and then Thursday, and then the markets are closed on Friday. And I won't be doing a webinar on Friday. I'll be doing the webinar on Monday because our markets are back open again. So I think that's probably like the best way to look at the market at this point is that, it's going to be a very quiet couple days unless some international news kicks out, which I kind of doubt, something internationally influencing. Things could be winding down a little bit. A lot of noise for the last year and, since the invasion in Ukraine. It's definitely made things tense, I guess you could say, across the planet. But I think we may be getting to a point where it quiets down more. Unless they're going to have some type of massive, offensive or something like that for Easter, which wouldn't surprise me any. From there, we slide over, as you can see here, with the oil rallying and the Canadian moving down. We'll go take a look at it over here and look and see what oil is doing there. There it is. And there's the oil. You can see it. It's up a little bit. It's firm. It's comfortable. The fast is blowing up like a rocket, and the slow is back underneath. So they're going to have to put probably $3 or $4 more into it to get this thing to lift up. At least it's not below the manifold. That's the good thing. It's going to be really irritating to watch this thing try to close in the slow, the slow close minus. And this is definitely a mad rocket run, on the upside. So maybe tomorrow they knock it down. Maybe the next day they take it back up into the 82 area or 83, and that might straighten out the slow stoke to get it just back up over the 0 line. I think we have some economic news on Friday too. That's the weird part. I don't know why they do that, but they do. So from there, we go over to, and you see the oil there. We'll slide in gold here, right there, and there is the gold. And then we'll put it up South African Rand over here. And since what's gold doing? Gold is up a little bit, so I'd assume the Rand should be moving down against the dollar. That means it's gaining. But it's not. It's doing it again like yesterday. And when we look at the gold over here, yesterday it did it make it back to the plus? I guess it did. There's gold came off the lows and closed up for the day, and we're not really seeing that in the South African Rand. They made that low, but it's still closed up and it's up here now, and it's like, oof, they've got real problems down there. It was so nice when they didn't have problems. In other words, their government was somewhat functional and there wasn't concern. Now that the cat is out, as they would say, or the horse has left the barn, or everybody knows, that's the worst part. The $500,000 caught in or found in the president's office, and just a lot of strange government stuff going on. It's become a bad tool, which is really sad because it was so accurate for so long. All right, and then from there we go finish it off with the Mexican peso. Let's get it up on here. And there's the peso kind of flatlining itself. And again, it could be trapped just like the Swiss and everybody else. They can't move too fast because then it's considered manipulation. So they've got to keep everything in line to the point where it's like, calm down, don't do anything crazy. You can see here on J4X where the fast stochastic is moving back up again. You can see the same thing here on our daily right there. It's flirting against the 0 line. And you can see the weekly is just ripped through there. But then look at the fast. It's well below the manifold and it doesn't care. It's like the honey badger. It don't care. So that's kind of like a little surprise there. And at the same time, there's talk of the Mexican peso being part of the BRICS. I mention that every day, and that's kind of interesting in its own right. It seems to have something to do with that hump that we just saw, but we'll sit back and watch and wait. There's always this talk about the BRICS, but if Mexico ended up in the BRICS, it would be the strongest currency in the BRICS. It actually would legitimize the BRICS finally having a solid currency like that. There's also talk seriously about they're thinking that the the BRICS. I think there's talk of Australia to get involved in it also, and that would be interesting also at the same time to see that occur. Let's move this over a little bit more so you can see it. Let's see. See if we can fix this. I think I have to pull it over a little bit. Oh, I see. That's it. Right there, like that. There we go. Okay. Yeah, so, and then I can move this one back over. That's what it is. Okay. So there's we are with the Mexican peso, which is the last currency we usually go through. Well, and, we can come back to any currency you want, but now we'll go look at, like, oil. We'll look at gold. We can start off with the metals complex and see what's going on. There was a time where people used to follow the Mexican peso for silver and copper. I know that, was it especially silver, but trying to think of the other country that produces a lot of copper down in South America on the Pacific coast, and I can't think of the name of it right now. I can see it and everything else in my head, but I can't remember its name. But there's no doubt about it. There's a couple of currencies at one time were very linked to these products. Now with QE, nothing seems to be right. All right, let's go over and check out. Let's go to the metals market. There it is again, gold. And you see it's holding on firm. Fast is breaking down pretty well, but we'll see. With the height of that slow from the manifold, I'm not that concerned about it. I see. Peru. Is it Peru? Yeah, I guess it is Peru. Thanks, Robin. Why people look at Mexican silver and copper? At one time, I guess they have some silver mines, and was it copper as a derivative off of that? So at one time it was less. This is when the oil market wasn't as big down there as it is now, so it had more influence. Now they produce about 5 million barrels a day, so they're really a strong oil nation, and so I think that has more of the influence. But at one time, oil was only like million barrels or 500,000 barrels or something like that, and so. The metals market was more important. I remember back in the 80s and the 70s, we would pay attention to the metals market when trading the Mexican peso. All right, there's silver. And you can see the silver is just doing its best to just kind of hang out. We keep on thinking, the metals should go up in value, but again, they're fighting the Federal Reserve. And that's a tough fight to have. So now there's silver. Trading very well. I can't complain about the math. The math has done a good job. Went into the sell here. Gave it weeks in the sell, nice. And went down. That's always important too when it goes into a sell. You want it to go down, and just like when it goes into a buy, you want it to go up. Took a couple of days, and then it finally went up, but it was in a sell, so you didn't want to take that trade to begin with. And then you could take that trade again because we're in a sell. And of course, that was very happy. Same thing with that one there. And now you take the longs because we're in a weekly buy. All right, from there, I can't believe I forgot Peru. It doesn't even sound right in my head. I'm going to go put a world map up on one of my screens. I don't know why. I'm sure you're dead right, too, but for some reason, I guess it's got to be Peru. They have all those metal companies there and so forth. I'm looking at it now. Let's just blow that up more. Yeah, it's Peru. Don't ask me why my brain couldn't come out with the word Peru. I always recommend it. They what did they do? Chile. That's what I'm thinking of. It's Chile. I knew it wasn't Peru. It's Chile. They privatized their Social Security system, and that worked out really well. Santiago is the capital. Yeah, it's Chile. I'm thinking about. Chile produces that. What it is that they grow. Was it peaches and blueberries that are excellent. Every year I look forward to them in January and February. All right. And so that's the reason my mind, I knew it wasn't Peru. Oh, they may produce copper in Peru, but it's Chile. Chile's the larger oil copper producer, I believe. Okay, from there we go over to, there's silver. You can see the same thing. Now let's go look at copper. There it is right there. Boy, gets into the weekly buy now. It's okay. Today it's flirting with the sell. The weekly sell. That's interesting right there. And now why is that there? Should be right there. So it's been in that sell for a couple days, like 5 days now. And, you would think it would stay firm because right now China seems to be kind of calm. It is like watching China's economy when you watch copper. So, it should be a relatively static type of product. And that's why people look at Mexican for silver, because they weren't always an oil producer. And metals were pretty important back then. Now, from there we go over to platinum. Wow, look at platinum leap today. Whoa, doggy. Up $30. So, what's gold doing? Let's go back to gold. It's unched. And silver is unched, basically, just up a little bit. But platinum is lifting, so that could be a good sign for the metals traders. They may start to lift that metal up again later in the day. Unfortunately, the South African rand is not giving us any clean direction anymore. Normally it should be down right now. With gold being very firm from yesterday, but yesterday it was down and today is down against the dollar. So it's not really giving us the insight that we usually draw from it. And that's it. Yep, they produce it. I keep on seeing your question over and over again. All right, and then from there, that's it. That's the four metals we pay attention to. And then from there, let's do this. Let's put them up on J4X, just a quick run by. So we saw gold on there. There's silver. Just a long, firm move. And then let's see the copper right there. It's having its issues too, doing the breakdown. You can see the fast stochastic dropping really fast. So there's definitely issues there. All right, now from there we go over to let's see, we go to I guess you go to the energy side. Let's take a look at the energy side. There's crude, we saw that. It's looking firmer, so that should do a good job of pushing the Canadian even lower. And then you can see the back month is trading 81.28, and the front month is what, 38? 63. So now it's an actual discount. Back months are discounted and they're rushing towards the front month. And there's, today's what, the 4th. We don't lose that contract for another 15 days. So they're just reaching for the front month. I guess there's a need for delivery of it, as it's taking off. A lot of people probably thought, like I was, that when we went in that weekly sell in the 78 area and it got down to 65, I thought it was going to go visit 62, but maybe a lot of people just didn't take it serious. When I went into the daily buy at 68 or 67 and change, obviously not many people had a chance to know that I went into a daily buy, and so they didn't cover, and boy, they had an opportunity to be flat and all the way up into that. Here we were in a weekly sell daily buy. That is a neutral position for us. And it wasn't until Friday we got into the weekly buy, and then obviously our math caught that whole $5 gap because of it. So at this point in time, the world must be caught flat-footed for delivery. The refineries probably need some. And then also we're going into the driving season here in the States. So we're not far from that. So what is this? We're in April. Driving season really starts in May, mid-May. So they got to do something. They got to do something. They got to own the stuff. Not counting what Saudi Arabia did and what the House of Representatives did with H.R. 1. All right, from there, we see the natural gas. And it is just on the edge. Look at that. Red and green. 2 days of red and green. It's trying to lift up. The low yesterday was $2.01.5. Today's low is $2.08.5. So it's battling and it's trading at $2 and almost 10 cents. $2.09.99, 98, 97, 98, 99. Let's see if it'll give us a 10. $2.10. Come on, give us a 10 cent. Click. There it is. $2.10. So let's take a look at it over here. There is Brent. Oop, that's not it. There's Brent. And you can see Brent has been moving up. It's in the 85s. And then you can see the stochastic just ripping all the way up. It's at the high end of the range and it's having an issue about rolling over. Then at the same time, we go and look at West Texas right there, doing the same thing as our West Texas is doing, because it's the same contract, of course. And heading for the 82 area. And then from there, we go over to the Nat Gas. Nat Gas. There's U.S. natural gas, $2.99, offered at $2.10 3, or $2.13.80, $2.14, $2.13. See the action. Watch it trade. Watch them trade. So now, we drift to our favorite of favorites. We go to, as Yano says, it's my favorite stock. We go down to Spain and look at the energy company down there. And there it is. It's still hanging out on the bottom end of the range of, or the top end of the range of 27. A little disappointed there. Kept on thinking, weather's getting warmer, so forth and so on. You would think less demand on oil, natural gas oil, that is. And instead, no, it's holding firm up there. So I guess it's going to be that type of dilemma situation where they can't really get the natural gas down because they just don't have enough of it. HR 1 is supposed to resolve that. We'll see if it does. That's probably why Nat Gas, you would think Nat Gas, American Nat Gas would be higher, thinking that they're going to be able to sell a lot of Nat Gas. You would think this move that we had here was just like a dead cat bounce. Boy, it failed so hard with that action right there. And then now we are buried down to here. It's going to be interesting. We saw the expiring contract. I guess it was last month or 2 months back. I guess it was around, went down to $1.90 and change, $1.89, something like that. I think it was $1.90 something. But we'll see how this one goes. The fact that they're firm in a season where oil is, natural gas is less demand, I would assume that it would find a way to go down, but it's not. So they must be loading up on it, just building inventories as best as they can. No problem, J.A., no problem at all. All right, now what do we got? We got nat gas done. We got the energies done. We got the gold done. Let's go over and take a look at the stock indices. So there is the S&P 500. We'll start off with that right there, and it's been climbing for a bunch of days here. And let's put it up over here. There we are. There it is. And let's put the S&P up there, like so. And it's, oh, they traded that down to the 60 area now. Huh, interesting. Let's take a look at it on an intraday basis. So they've basically been selling it down. It's still up for the day. You know, it's up 7 points. But at one point it was trading over 70 right there. It got up to 71, 75. And now they've taken about $10 out of it. And you can see here, we're playing with the underside, getting ready to be totally minus. You see the volume is breaking down, and you can see here, same situation. It's been in a sell from there all the way down. So they're putting a little pressure on the stock index. Not much, but some. Let's see. Oh, Doc on the left is stochastic fast, sure. But what is on the right screen in the middle? That's my... here, let's go back to it, and so the middle one is the daily, and the bottom one is the weekly. So we see the daily and the weekly. When they join in together, it's a buy. When they, or if they go into a weekly sell and you get a daily sell, like here, it's a sell, that type of thing. So that's what that is. So the middle is the daily algorithm, our proprietary daily algorithm, and our weekly is the bottom chart. And then up top we keep the daily up there so you can see it where the daily is moving around. Alrighty, I hope that helps out again. No, but they're both smoothed by a stochastic. It's a proprietary mathematical formula of mine. But I used the histogram and the green line here, and also the blue dashed line, the fast one, is smoothed by a stochastic. So that's why it's ahead of the curve. It's using my formula with the same products, and when you look at them, they have the same basic trade. It's just a trend, but mine is faster because it's proprietary. Let's see, and you just multiply week 5. No, what happens is that, like when looking at the yen, let's go back to the yen. We'll do the yen since you're following the yen. Right there. And so, there we are. And you can see here, it went into the weekly sell here on the slow. That's the green. The fast is the blue, right there. That's on a daily basis. I'm sorry, this is the weekly. Okay? Whereas this is the daily right here. And so, you can see with your MACD moving up, our fast also bottomed in that area and started to move up. At the same time, on a very short-term basis, the daily itself went into a buy. Back 7 days ago? 3, 4, 5, 6, 7 days ago. Back 7 days back. Let's see. Okay, I will develop something myself, and we'll talk about it after a month. Yeah, so what I use on J4X right here, this is the fast-moving stochastic. Let's put the yen in there again. So you can see the fast stochastic took off. The Hinky-Ashkeys turned green and gave it a buy signal. That's what that's all about. And then you see it break down, but the Hinkies are still green. So, it's saying, don't get too fast to go sell it yet. That's what it's saying. But one thing it does say is take your profit from here. from that move of those days, with this breaking down, take the profit. Then if this turns red, like it's trying to do right now, then it's a sell signal and it's trying to head down. And let me show you the components to it too. So there is the fast stochastic. It's a 5-3, and that's the input, and it's a green line there. Okay, and then we go and look at the slow, which is the yellow dotted line right there, and that's a 5-3 also. All we're following those, we've got the K turned off. We're following the D on both of them. And that's what we're doing, is we're following the D. And that's the yellow. All right. So now we go back to the S&P 500. And there's the S&Ps again, made a little bounce up. Now let's go take a look at the S&P in a daily. Right there. So you can see our work turned up here last week, and now you got that strength from it right there, and a daily buy and the whole bit. All right, now we drift over to the Tech 100. There you are. Okay, so there it is right there. It's been in a buy for 4 weeks now, and went into a sell for just a little action here, and then went right back into the buy again. It was interesting. It was choppy for like 4 days, but looks like the Tech 100, which is very interest rate sensitive, is now making challenges to something like 6-month highs or something like that. Let's just go put it up on J4X and we'll get a better flavor for it. Right there. So the last time we saw J4X up that high was, they took out that high right there, which is, what is that? That is September. So it's September of 22. So we're easily looking at 6-month highs at this point. And you see the next real area would be close to like 13,700. It's going to be interesting. And over here, you see the same type of action. It's moving up and feeling very comfortable, it is. And that's because it believes interest rates are going down. Just as it fell down, believing interest rates were going to go up, and they were so right. The product picked it perfectly. In other words, it knew with interest rates rising that they were going to have more expenses, and that's why the tech companies lost value. And they had a hard time all year long. Once the Federal Reserve came out and said, oh, all that transitory stuff we've been talking about for the last year, forget about it. That's what it came down to. It was like, forget about that. We were wrong. Boy, that has to be like one of the worst mistakes the Federal Reserve has ever done in my lifetime. I've never seen them be that far off understanding what the marketplace is doing. Especially the worst part about that is now that they are the buyer of last resort, they're the New York Stock Exchange doesn't really exist anymore the way it used to. The specialists are gone. They don't control the stocks anymore. The funds don't really control the markets that much either. It's all Federal Reserve direction, basically, or strength. The Fed pumps in dollars to every one of them for free at night to keep them holding on to positions, things like that. So they're cutting down the volatility from it all. All right. And then we'll go over and look at the grand lady of them all, the Dow Jones Industrial Average right there. You see that's doing the same thing. It's slowly lifting up. Let's put it right there. There it is. And that's the action we see there. It's doing that same thing. Just open up something I want to see. There we go. And that's the Dow, and it's battling it. Oh, let's go back to it. The Dow is battling its way back to the 34,000 area again, and it's taken out today. It took out this high of what is that? 33,696. Just double check that again. No, the high is 33,855, and today's high is 877. So it took out the high there, and that is early March. So it'll be interesting. There's November. If we go back and look at the highs, I guess this is what we're really looking for, is that August high to be taken out, which would be the 35,000 area. Let's see. Thanks. If FES is wrong, just print 2 money. Yeah, really. No problem for them, just for dollar savers. Oh, yeah, and everybody else in the world, too. And fundamental technical analysis, technical analysis is more accurate than fundamentals anymore, because the fundamentals are so bleached or, wrecked by their printing. No, I hear you. Not as an investor, but investors as we and businesses owners and safe. Yeah, exactly. It's just funny to watch it. I know it's crazy. Matter of fact, I saw a funny headline in Facebook. Someone posted and said they canceled April Fools this year because things are so foolish at this point that it's awful hard to have an official day for it. You're right. It is. It's very funny to watch and very odd, the whole thing, All right, traders, we're out of here. We will catch you all tomorrow on Happy to Hump Day, Wednesday. So this is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. And J.A., thank you for some questions and conversation. We loved it. Love the conversation.